Hello and welcome to the SCI video series to support the Accounting Foundations course. My name is Eric Andrews, and in this video we're going to look at the closing process. If you remember from the last video, we had just finished working with the adjusted trial balance, and through the adjustment process we had a number of accounts where we increased the balance of the expenses. So what we're going to do in this video is go through the process of closing out the period where we basically zero out our income accounts, in this case fees income, and zero out our expense accounts and take the profit that we earned and move that into the owner's capital account. This is something that we do at the end of every period and is one of the last stages of the accounting cycle. Now this process involves both the general journal and the general ledger through a series of transactions. But before we start moving in with the actual entries themselves, let's go back to our T accounts and take a look at this process and what's actually going on here. The first thing that we're going to do as part of the closing process is zero out our fees income account. We've got a balance in there of $14,000, and that is a credit balance because fees income has a normal credit balance. So to zero this out, we need to do a debit entry of $14,000. That's going to leave us with a balance of zero. Now because this is double entry accounting, we can't just leave the one transaction in there. For the credit entry, we've got to come down to an account called income summary. Income summary is a temporary account that we use during the closing process to zero out all of our other accounts. So since the entry was a debit on fees income, it's going to be a credit to income summary. Now the other accounts that we're going to zero out are going to be our expense accounts. Expense accounts have normal debit balances, so in order to zero them out, we're going to put a credit entry in each of those accounts to zero them out. At the same time, we're going to take the total for the amount of expenses that we are zeroing out and add that to the debit side of income summary. Since we have a $14,000 credit entry and a $4,690 debit entry, that leaves us with a balance of $9,310 in the income summary account. Now what we're going to do is we're going to go through and zero out the income summary account. We add a debit entry of $9,310 to that account, and at the same time we're going to now credit our owner's capital account. Previously they had a $50,000 balance, so we're going to add another $9,310 to that, giving them a $59,310 balance. The last stage we go through is zeroing out our owner's drawing account. They had a $1,000 drawing account balance because the owner had taken money out during that period. So we're going to go in and add a credit entry to the owner's drawing account and a debit entry to the owner's capital account, essentially zeroing out that account as well. What we have remaining then is a balance in the owner's capital account of $58,310. So now that we've seen the accounts that are involved and how the entries are going to be entered as either a debit or a credit, let's go back to the journal and take a look at the actual entries. As with any set of entries that are similar, we're going to add a title up here at the top. Closing entries is the title that lets us know that the next few transactions are part of the closing process. Here is the first entry where we are debiting fees income. That is what is zeroing out the fees income account. And then we have the credit entry into income summary, which gives us that balance of $14,000. The next entry is what we call a compound entry. This is where we have one debit entry that gives us an entry of $4,690. And then at the same time we have several credit entries. In this case, all of our expenses are going to be zeroed out at the exact same time. Now we have that balance that was in the income summary account, and we got to deal with that. So we had a credit balance, so what we're going to do is debit income summary for $9,310 and credit the owner's capital account for $9,310. That's what's going to increase the balance of that account. Finally, we've got to zero out the drawing account. In this case, we're going to debit the owner's capital account, decreasing the balance by $1,000, and credit the owner's drawing account, and that is going to zero out that particular balance. Now remember from prior videos, the journal entries are how we get our information into the ledger itself, and the ledger is the document where this is important. So if we look back to our accounts in the ledger, we had a $14,000 credit entry that gave us a $14,000 credit balance. That's where we were at the beginning of the process. The entry that we did in the journal, that was a debit entry to fees income, is what is going to now give us a zero balance in that account. At the same time, we're going to do a similar process for all of our expenses. We have debit balances, and so a credit entry is what is going to zero out that account. Debit balance, credit entry. This is going to be the same for all of our expense accounts. And as we look at the ledger for our income summary account, we're going to see that we had a $14,000 credit entry, and that gave us a $14,000 credit balance. We had a $4,690 debit entry, which gave us a $9,310 credit balance. The last thing, remember, that we have to do now is we've got to go in and have a debit entry of $9,310, which is not going to give us a zero balance. At the same time, we've got to move that money up to the owner's capital account. So the $9,310 will make its way up to there and give it a $59,310 balance in that account. Finally, we had a debit balance of $1,000 in the owner's drawing account. We added a credit to the owner's drawing account, which zeroed that out. And at the same time, we debited the owner's capital account, leaving us with that balance of $58,310. So that's an overview of the closing process and how to analyze it with all of the different types of accounts and journals and ledgers. Thank you for watching, and I'll see you in the next video.